Since January 2021, homeownership affordability has been dropping. It's down 32%. To talk about that right now is E.J. Antoni, research fellow with the Heritage Foundation. Good morning to you, E.J.
Good morning. Thank you for having me.
Praise be to God. It's good to have you back on the program. Thank you for your time today. You've got several articles I'd like to get your comments on, but let's start with the housing one. It kind of blew my mind earlier this spring how housing prices were just skyrocketing. There were bidding wars for houses in my neighborhood, which are not worth it. I mean, way overpriced. It was highway robbery, in my opinion, which is making it harder for younger adults to buy homes and start their families and all of that. But your article over at the Heritage Foundation is pointing to the bubble bursting now. What's going on?
Well, if you look at the median home, for example, when Joe Biden was first took office, and you compare that to today, I mean, the contrast is just absolutely unbelievable. So not only have home prices increased dramatically, as you just pointed out in your own area, but on top of that, now the interest rate on the typical 30-year mortgage has doubled in literally just a few months. And so that combination of higher borrowing costs and a higher principal to begin with has resulted in that same median home costing you about $10,000 more a year in terms of your mortgage payments. Now, the house is not any bigger, right? It's not a newer house. It's not a nicer house. It's not in a better location, some kind of prime location or anything like that. It's the same median house. It's just a matter of it getting far more expensive. And as you pointed out, it is now far outside the reach of many Americans, especially young people who are trying to get their first home and start a family. We have essentially, I hate to say it, but it's true, we have essentially created a permanent renting class in this country.
I think there's an intent to have a permanent renting class in this country, which, again, I fear for my oldest son, who's married with 3 kids. Will he be able to own a home? I'm not so sure. You point out in your article that the sales of new homes have fallen 39% so far this year. And also the sales of existing homes are also declining here. New home construction is also falling as well?
Yes, absolutely. I mean, just from soup to nuts, the housing market is looking very, very sick right now. Prices have essentially run up so high that people just can't afford these homes. And usually what happens in those instances is that home builders then begin to, or I should say the home sellers begin to lower their prices, except they can't. And the reason they can is because the home builders are finding that the materials and the labor are so expensive to build these homes that it is just not profitable to sell them at a lower price. And so what's happening then is home builders are actually just deciding to build fewer homes because they can't sell more profitably. So they have to sell less in order to make a profit. And the consequence of that now is a shrinking supply, which puts further upward pressure on prices. So far from prices stabilizing and getting back to normal levels in a healthy way by markets responding to natural incentives, instead, we're setting ourselves up for a popping of the bubble, another housing collapse.
And what will happen then?
That is a great question. Unfortunately, there's a big wild card there, and it's the Federal Reserve. And the Federal Reserve, this Federal Reserve in particular, has proven to be nothing if not unpredictable. So they have at times intervened when they said they wouldn't, and they have at times failed to intervene when they promised they would. So if they do intervene in the housing market and continue to prop up prices, then that basically forestalls the day of judgment so that home prices will stay elevated for longer instead of getting back to more realistic valuations. If, however, they decide to just let markets finally work, then we will see another housing bubble popping like we did back in 2007, 8, and 9.
And I guess the Fed is also saying that they are going to eventually slow the interest rate hikes. But they're gonna keep on track for now, and then slow things down a bit in the, I guess, not so distant future. So, what do you predict will happen to that interest rate over the next, let's just say, 6 months or a year?
Well, again, in terms of what this Federal Reserve is going to do, it seems to be more or less, a crapshoot. So just like if you were playing craps at the table, it's whatever the dice happens to come up that particular roll, it seems. Right before the Federal Reserve gave us the first 75 basis point hike, that means raising interest rates by 0.75 percentage points. Right before that, they promised that that was off the table. And then they proceeded to do it several times in a row. And now it looks like they're going to do it again. So where rates are going to go, sadly, is unfortunately at this point anybody's guess. My best guess is that we're going to continue to see these hard and fast rate hikes. And by the way, I actually think that this is what we need. This is what we should have had a year and a half ago. And had we done that back then we wouldn't need to be so aggressive now to get inflation under control. But sadly, that's where we are.
Okay, but every time they raise that interest rate by a percentage point, that dramatically affects our interest payments on our national debt. And how many countries are buying our debt anymore?
It is going down gradually to the point where the Treasury Secretary is now worried about the liquidity of the Treasury market. In other words, she's worried about finding people to buy these treasuries at auction. But again, this is what needs to be done. What Paul Volcker did in the early 1980s is he basically went to the Treasury Department and he pulled a Pontius Pilate. He washed his hands of the whole thing and said, you know what, you want to sell these Treasury bonds? You want to finance all of this public spending? Do it yourself. And he's basically stopped buying all those Treasury bonds. So then the only way the Treasury could sell those bonds was to offer them at much higher yields, in other words, much higher rates. And that caused rates across the economy to rise. And yes, that did cause a recession in the early 80s, but it set us up for stable prices for the next basically 20 years. So again, that was the right thing to do. But in terms of the national debt, you're absolutely right that this is completely unsustainable, but it has been for a very long time. That unsustainability has just been hidden for years by the Federal Reserve allowing small amounts of inflation year after year into the economy to basically help pay for that debt. And now that's starting to come to an end.
Mr. Antoni, obviously there are many factors involved in how inflation becomes it becomes to what it is right now. You explained just that, the aspect of the 80s kind of coming to fruition. But for those people who don't understand why the Fed is raising the interest rates, can you explain a little bit why they do that and how that corrects the inflation?
Certainly. So what the Federal Reserve essentially does in order to cause inflation is that it creates money really for the federal government to spend to finance these massive deficits. And then that money is essentially collected through the hidden tax of inflation. So in other words, if you're wondering where did the government get the trillions upon trillions of dollars that it has spent over the last 2 years above and beyond what it normally spends, every time you go to the grocery store and you pay twice as much for eggs, or you go to the gas station and you pay twice as much to fill up your vehicle, that is the hidden tax of inflation. That is how you are paying for all of this unfunded government spending. So now what we've done is we have basically just flooded the market with all these dollars, with all this excess liquidity, and now we have to get rid of it to prevent prices from continuing to increase. So instead of the Fed going to the federal government, like Paul Volcker did, and saying, okay, no more, we're taking the money away from you and you need to get your spending under control. Instead, the Federal Reserve is going to the American people and is taking the money from them. So they're going to hike these interest rates, make borrowing prohibitively expensive for many people, for many businesses, and that's one of the reasons why we will see layoffs and unemployment in the future.
Article over there that I read this morning says nowhere left to hide. Neither White House nor common man can evade recession data. Are they still trying to say we are not yet in a recession? And you think we are?
Absolutely, on both accounts. Biden just the other day in what was a quasi interview, I suppose, with I think it was CNN, was telling us that not only are we not in a recession already, but that he doesn't think that we're going to go into a recession, that it is essentially off the table, or if it is a recession, it's going to be mild or some such other nonsense. But no, we already had a recession, and increasingly people are no longer asking me, are we going to have a recession? They're asking me, is this going to be a double dip? In other words, we already had the recession in the first half of the year. The economy contracted for the first 6 months. I mean, that's just a fact. And now we are probably going to see some positive growth in the third quarter. But then after that, all bets are off.
Yeah, you point out the GDP as one of these telling issues, but also disposable income is down by 1.5%. I think you have the GDP down by to 1.1% in the second quarter.
Sorry, was that GDP you said?
Yeah, the total amount of money earned by the nation's people and businesses was revised heavily downward from 1.4% to just 0.1% in the second quarter.
So that would be GDI, gross domestic income, right? So one of the talking points that the administration was using to counteract the fact that GDP, how we traditionally measure the economy, was shrinking, they were saying that GDI, gross domestic income, which is theoretically equivalent to GDP, but they fluctuate over time. They were saying, well, GDP is negative, but GDI is positive, so therefore no recession, right? Well, what happened is that over the coming months after the initial reports came out, GDI was revised heavily downward to the point that the average of GDI and GDP, which is considered a supplemental measure of the size of the economy, that was revised from positive territory into negative territory. So again, there really is no data point left behind which this administration can hide. Even their own cherry-picked data points that they try to use to further their own narrative have at this point turned against them. The recession is confirmed, and the best thing we can do, instead of playing these Orwellian word games to try to convince people that everything's fine when it isn't, instead of doing that, what we should be doing is reevaluating our public policies, seeing what works and what doesn't, and trying to move forward from there.
You were mentioning this in the last segment about the real tax that's on the American taxpayers is in the inflation at the grocery store. I saw another article this morning, and it was quoting the Associated Press NORC Center for Public Affairs research poll that said roughly 46% of people now describe their personal financial situation as poor, up from 37%. I think I saw another poll being quoted about Republicans versus Democrats and how much they consider this inflation issue a major issue right now, especially going into the midterms. Of course, Republicans and independents were, well over 50% said this is a big problem. Democrats said it isn't. Kind of going back to what you were saying a minute ago about the White House playing word politics, I mean, golly gee whiz, are we really just going to divide down political party lines here? Inflation seems to be a real concern for every American, irregardless.
Well, I will say that if you look at the income distribution of Republicans and Democrats, I think that's very telling as to why Republicans consider inflation much more painful than Democrats do. So if you look at a Democrat base, right? Years ago, what it used to be is essentially a straight line on the income distribution, meaning that you had a very high percentage of low-income voters were Democrats, and as income went up, the percentage that were Democrats decreased in a relatively straight line. And so it would be the opposite for Republicans. Very few poor people were Republicans, and as people increased in wealth, so they also were more likely to be Republican voters. But today, it's a completely different paradigm. If you look at Republican voters, it's basically this bell curve where there are not many poor Republican voters. The vast majority are middle class, and then there are very few wealthy Republican voters as well. And then if you look at Democrats, it's exactly the opposite. Most of the middle class do not vote Democrat. You have a lot of very wealthy people and a lot of very poor people. Well, who is hurt the most by inflation? The middle and working classes. Who are hurt the least? Those on public assistance and the very, very wealthy. Why? Because those on public assistance are essentially insulated from a lot of these increases because they receive various not only cash but in-kind benefits. But if you look at the very, very wealthy, they tend to have assets that inflate very well, right? They tend to have stocks, which although they're not doing very well lately, right? They traditionally do well with inflation. They tend to have other assets that go up as prices go up. Their incomes adjust more frequently to price changes. And so it's not surprising to me that Democrat voters say that inflation is less of an issue for them than for Republican voters.
Okay, well, I think people are feeling it at, the gas pump, of course, but in the grocery store as well. And there are some scary reports about next year's food supply having dramatic impacts on what's going to be available to Americans. You couple that with everything we've been discussing in this, the future can be very scary for a lot of Americans. How are you seeing this financial future when it comes to all of these factors?
Not in a very good light, unfortunately. We definitely are looking at some food security issues in the near future, which is very scary. And it's more so uncomfortable for us here in America, but it is truly scary for people in the third world, where you're looking at the potential for starvation and not simply a higher food bill. I mean, it's one thing for us when we can't afford things that we want. It's another thing for other people in the third world and even parts of Europe when they won't be able to afford what they need. So, I mean, absolutely, this is very, very concerning. But I mean, what did you expect, right? What did you expect when we decided to shut down all of this American energy, when we decided to pour trillions and trillions of dollars into an economy and overheat it and cause inflation, not just here, but around the world? I mean, when did we forget that you can't spend, borrow, and print trillions upon trillions of dollars and expect no negative consequences?
So I want to transition a little bit to the student loan debt relief program that the Biden administration has been rolling out. I think they've been sued now by 5 or 6 different groups, one of which was based on what they felt was basically racism, and that was tossed out. But there's still like 5 or more still going on. How do you see this student debt relief program factoring into all of this?
I think I'm trying to think. I want to say it's the suit out of the state of Missouri. I think that one probably has the best chances, and I think there's actually very good odds that it's going to get the student loan handout that is going to get struck down 9-0 in the Supreme Court.
Wow.
I mean, it is just so blatantly unconstitutional. If it actually got passed, though, if I shouldn't say passed because it's not a law, but if it actually got rammed through by this executive action, if it somehow managed to skirt its way through the courts, I mean, this is just kerosene on the dumpster fire that is inflation. That is the Biden policy of inflation, I should say. And again, it is absolutely amazing how so many of the policies of this administration are focused on taking wealth and income away from the middle and working classes and giving it to the Democrat donor class. If you look at literally the only group, this is not an exaggeration, the only demographic group in the latest statistics that have actually seen their real wages increase under Biden, in other words, not just the size of their paycheck has grown, but how much they can buy with that paycheck. The only group that has seen that increase, college graduates. And now we're somehow going to give them a handout? I mean, that just makes absolutely no sense whatsoever.
Wow. Mr. Antoni, that reminds me of foreign policy, and I'm wondering what your take is on foreign policy. We've seen package after package of aid for Ukraine and the war that's taking place over there against Russia. How does that factor into the average American? I mean, eventually we're going to be paying that too, right?
Absolutely. And one of the really frustrating things right now is, although I'm glad to see the Federal Reserve belatedly allowing interest rates to rise and finally getting its act together, right? Better late than never, I suppose. But now we have a Congress and president working at cross purposes to the Fed. Every time Congress and the White House spend more money that we don't have, it's requiring the Federal Reserve to essentially backstop that. And as they continue to fill that liquidity hole, it continues to pump cash into the system. And so that means the Fed needs to raise rates harder and faster in order to try to get inflation under control, which, as we already discussed, causes a tremendous amount of pain for Americans. And the Ukraine funding is no exception to that. And it's even more frustrating that all of this money is not even being spent on Americans. It's going overseas to corrupt Ukrainian oligarchs with zero accountability whatsoever.
Yeah, it's interesting. I was listening to an interview with a gentleman who was a former combat vet. He's been running missions in Ukraine, not combat missions, but supplying medical aid or first aid kits and whatever, and he was talking about how much of that money is not going to what Americans intended for. It's a lot of waste there, and there's no oversight whatsoever. We're just handing, suitcases of cash over. And all I can think about in my head right now is the voice of Dave Ramsey, rice and beans, beans and rice. I mean, everybody knows that when you are in debt, you have to cut spending and increase income. It's not rocket science.
No, absolutely. And what's really amazing is that in the face of continued data month after month showing that these policies are having a negative effect on things like inflation, Washington just seems completely oblivious to the facts. We're actually, I think in just about a half hour, 45 minutes or so, we're going to get another read on the consumer price index. That'll be for the month of September. I think the consensus estimate is only like 8.1%. I think it'll be at least 8.2%. And again, Washington is somehow just completely immune to facts, immune to the data. And we continue to throw good money after bad, especially when it comes to things like Ukraine, with no accountability and no oversight as to where the money is going.
Wow. E.J. Antoni, Research Fellow and Regional Economics Data Center for Data Analysis at the Heritage Foundation. Heritage.org. Check out his articles there. Very, very insightful. E.J. Antoni, God bless you. Thank you for your time today.
Thank you very much.
All right. Praise be to God. That's going to do it for hour number one. If you can join us in the second hour, Hector Molina Jr. is going to be on the program to dive deep into the Sunday Gospel. Plus, we'll have our game show, more opportunities to win prizes, and the after show. Let's talk about Our Lady Fatima. All that coming up in the next hour. You can hang out with us at grnonline.com/CDT.